Hey everyone, just summer update. Haven't put out much since the summer started, and most of the positions have been similar. We haven't really switched anything around. There hasn't been really much to update anybody on. Tech has been raging. Most of the trades have been working out pretty well. Bonds have been really, really flat. That could be ending soon, and we'll go over that today. But we'll see where that's going to go. The bond position, we're really waiting for confirmation, to get one direction, one way or the other. It's not a short, it's not a long. It just continues to kind of sit in this neutral range. So we'll go over that today. First chart here is Aussie dollar to yen pair. This pair, to me, it's an interesting pair because it can always kind of tell me what's going on with the energy sector, what's kind of going on with gasoline, oil, and so on. And also, just are we looking at a commodities rally compared to a possibly a deflationary collapse? We see those things a lot in this pair. And this pair has kind of been showing some strength recently. It gave a lot back in 2022. It came down quite a bit, basically bottomed in March of 2023. And so as we bottomed in March of 2023, we started to turn back up here and we look like we're getting close to new highs. So if we're getting close to new highs, this could absolutely be a good turning point to see some things follow. Things like gasoline, things like copper. I didn't really think that that was going to happen. I knew that we would have a pause in this inflation thing and possibly turn back up and start taking back over again in the energy sector. But I didn't think it would come this quickly. And I don't know if it is. There is no confirmation on that yet. This is just speculation. Intermarket analysis is great. However, nothing's 100% in intermarket analysis. Relationships change. So we just have to always wait for price confirmation. It's kind of like the bonds. This is a perfect rally for bonds to kind of jump in and also be involved. But it's the one thing that hasn't picked up yet, which is also normal. You'll see lagging parts in trades. If you think correlations always work, they don't. And so next thing you know, something's taking off, then the next thing takes off, and then the next thing, or sometimes they don't. We just had a deflationary collapse last year where the yen was weak. So, anything can happen. So we're always waiting for the price of the set product to confirm. Gasoline is absolutely not confirming yet. Same with oil. These are just kind of stuck in a range at the moment as well. Next chart is the Canadian dollar. So the CAD is an interesting one because it kind of back in the day it was really tied to oil very well, and now as the days move on, it goes back and forth between oil and gold and all these different things, but it's still a commodity based currency. We are seeing that it did give a buy signal recently, basically a weekly pierce of the Bollinger Band, hit through the upper one, closed above it. That's usually a good sign of a trend change. Also breaking out of this range here on a weekly chart. So, keep an eye on the Canadian dollar to give some headwinds to the commodities rally if it's going to come. Um, the pound. Sorry, I was reading my hashtags. I make notes to myself on that. That's funny. If anybody knows that reference, just keep that to yourself. Anyways, pound, stay long. We're long the pound. It's been rallying. It's been a good move so far. Higher highs, higher lows. It was range bound for a while, broke out of that range, pulled back, hit the top of the range, continued to go higher. So to me, I'm kind of looking at the pound as a major hold right now. Just continue to hold it, stay long the position, and don't do anything stupid. Basically what I mean stupid isn't to get out or into a trade. It's they're going against your trading models. Is it something that I'm going to be like, oh man, it looks really overbought here, or looks really oversold here or something? No. For me, I want to stay long positions that are just continuing to be in uptrends, and I want to stay short positions that are in downtrends. Speaking about something that's moving into a downtrend and to stay short of, the dollar here, we had this basically what we call a fallen angel pattern, meaning we fell to support, we moved up, fell to support again, moved up. Now it's coming down again. That's a really good sign that we could break through these lower levels. I could talk about breakouts, and basically, you can grade them. If it broke down here, immediately there's some highs over here, so there was resistance as well. If it just broke straight down, that would be a grade C breakout, meaning the worst breakout you could have, because it's so over, if you want to use the word oversold, so overdone at that point. There is no consolidation in the meantime. It just went straight through this level. Grade B would be, it kind of pulls back once and then goes right through it. That's a grade B. Grade A breakdown would be consolidation and a squeeze pattern on the Bollinger Bands, which is we have both right now, and then breaking down. So this could be a really great breakdown here in the dollar, which will lead a lot of other things, we'll get to later about emerging markets and so on, that could look very positive for those sectors at the moment. Vexing peso, I don't think anybody was really looking for the peso to be the winner. But really, I was looking at it, and it's only because I look at relative strength. Relative strength was saying that the Mexican peso was holding up better than all the other currencies, which is pretty wild. People really don't know what's going on there. People think that there's something bad there or something good there. Everybody has a bias because most of the Americans, they don't invest outside the United States. They don't look at currencies. If you talk to any trader all over anywhere in the world, they'll say the same thing, that they trade currencies. They trade forex. They trade all types of futures and currencies, CFDs, whatever. They trade currencies like crazy because they understand them. In the US, we have the world's reserve currency. A lot of people don't really trade currencies at all. But it's a very important market to trade and understand because it affects the macro like nothing else. And so, the Mexican peso consolidated for a long time. We broke out of those levels. It's not turning back. Same thing as the pound, stay long, don't do anything. Is Bitcoin. Everybody wants to have an opinion on Bitcoin. We put it on here because of that. I do trade Bitcoin. It is in the futures portfolio as well. I am a fan of it, but I do think it's it's a very volatile product. It's very hard to trade. All the rest of the altcoins with that make it even harder to trade. So, if you are new to trading, this might not be the place to start. But basically, what you do is you take your positions, you make them extremely small because this is the most volatile product in history. And so, if it is smaller positions, you're not going to have as much volatility in your portfolio. Then you can trade it properly. But Bitcoin here pulling back to support, resistance turned into support. It pulled all the way back, tagged the top of this, finally got to tagging the top of support, those old highs over there. Could we move up higher here? Possibly. Confirmation would be getting above these levels of 26, 27. Even more confirmation, wait for a new high. But this could be a good trend coming out of low volatility. Low volatility always leads to high volatility. So if we're here and we start to break to the upside, it could be a big move to the upside, but also be aware of the possible downside at all times. Use your stops. Ethereum to Bitcoin, some people hate these charts of considering Bitcoin and Ethereum to be so unique and different from each other, and comparing it to this or that. Really, it's just when you back test it, you notice that there's a correlation between risk on and risk off in these markets, meaning that more people go into things like Ethereum and altcoins when there's a rally in the crypto space. And so basically you'll see Ethereum start to make higher lows and higher highs when against Bitcoin, when more money is kind of going into the space. So we're kind of looking at it that way, going, okay, well, where there's less money going in the space or more money going in the space, or when Ethereum to Bitcoin's in a downtrend, or when Ethereum to Bitcoin is in an uptrend, we're looking at rallies while it's in an uptrend. We're looking at drawdowns when it's in a downtrend, and just kind of paying attention to that. So right now we're seeing that it is making a higher high. Honestly, it's an ugly pattern still, not really seeing much. And honestly, that's another relationship that's going to change. This is very early in the crypto space. We don't know exactly what's going on just yet with everything, or where this ends up, or even if it becomes an asset class, for a long period of time. So, this relationship will change. But in the meantime, it's been pretty consistent. So just keeping an eye on that, seeing that we do have a higher low, is that going to lead us to a new rally in Bitcoin and a new bull market? We'll see. Intermarket analysis and breadth. This is Banks to Gold. Banks to Gold has come all the way back down, gotten to support. Does that mean that banks are going to start taking off again? I don't know. Right now, it's kind of in this area. Gold is at resistance. It would be a good time for gold to pull back, but also gold's really close to making a new breakout, moving to new highs. So we'll see where that ends up. I would just take note of this being at an inflection point, resistance being tough. If you are new to buying or putting on a new trade in gold, waiting for a new high. Copper to gold ratio. Copper has been strong this last week. It hasn't been great lately, and 1 week doesn't make a trend, but it's something to take note of. Because basically we've had yields and it's stuck in a range. Now, I don't know if that means up or down, that we're stuck in a range. When you have something stuck in a range, everybody likes to speculate. It's going to crash. It's going to go up. It's going to do this. Really, it's stuck in a range. It's boring. I can't make a good judgment call on it because it's just stuck in a range. When it gets out of that range, I will be able to make a better judgment call on it. And sometimes that's the best thing you can do with trading is just sit on your hands and know that there is no direction at the moment and waiting for direction to show itself. Commodities against bonds. Same thing between signals. We're just sitting there stuck in this range. And it's going to go one way or the other, and once this moves up or down, it's going to give us a good signal. But for now, it's kind of stay in your lane, just take some time off, watch it, wait till it gets to a confirmation point, and then put the trade on accordingly. But we are seeing that there's more weakness than strength in this at the moment. So I'm still leading towards, gold, treasuries, growth stocks being the way to go at the moment. So bond stocks and gold and commodities versus commodities across the board. So we're seeing the same thing, it's moving up on all those areas. Does this start to turn over and does commodities start to take off again? It's yet to be seen. We'll see. We had that huge rally in commodities from 2020 to 2022. We'll see if that continues. NASDAQ to small caps. So I put this chart has been being updated for years and years now. And we saw that at the election, we had that blow off top that happened after 2020 in the election, got to a topping period. Value really took over at that point. And now growth and tech are starting to outperform again. So this is large cap tech mainly. This is the NASDAQ 100 we're showing here. So is this the next leg up in tech? Possibly. Do we get to these .com highs? I don't know. We'll see. But for now, the strength is in the tech sector. So we want to be in the tech sector until that changes. S&P market cap weighted to equal weight S&P 500. This is a 150-day Donchian channel. Basically, it just tells me when we're in a major trend one way or a major trend the other way. This started breaking down in 2022, saying that we were getting into a bear market. In 2023, we started to hit highs in the RSP way before the S&P 500. So seeing that we did that, everybody goes, oh my God, breadth is terrible. And really breadth is cyclical. We want to see the large caps involved in the rallies. Like when people talk about this and go, oh, well, breadth is bad. It's not as simple as that. I wish it was. Trading is very complex. And the complex part of it is understanding that sometimes the rally will be taken over by the small names, by all the other names, and then sometimes it's taken over by the top 10 stocks. and really, S&P started taking over. The top 10 stocks really started ticking up. And here we are today, as everybody's saying, there was no possibility that this rally could last. It's last. And that's the thing. You just don't see rallies go up and then crash right back down, to zero. That's not what stocks do. You're going to see consolidation. You're going to see, a weak new high. Like this is a weak new high. This is not a weak new high. That is a lot of strength there. This is weak. It could barely make it to new highs. It chopped around and made that W top or M top and then turned around and crashed. So we're making new moves and new highs in the S&P 500, but not new highs, but based on a 52-week high. It's something to pay attention to, though. The RSP is catching up now. So, this could be a healthy rally at the moment. And then, more people might be more interested in getting involved. It's still, even though people keep talking about positioning being so bullish, it's not. They talk about the AAII, and we're talking about a small group of investors at that point. If we're talking about positioning, being bearish or bullish, like that hasn't gotten to anything near extreme bullishness yet. Yeah, you could look at the fear greed index, but that's not just positioning. That's a lot of put call ratios and so on, which is something to take note of. But a lot of the times, new rallies and new breakouts, that's what they consist of. They consist of a lot of greed at the beginning and a lot of call buying at the beginning, and a lot of people starting to flip to long and getting longer and longer every week. And at some point, the whole thing you want to look at positioning is extremes. And once it gets to extremes, that's something that we need to change and do something differently about. Semiconductors to the Dow. I use the Dow, and it's probably just because I've back tested it against other things, and back testing it at the S&P 500. It just doesn't work as well. So I still use the Dow 30 to look at relative strength if I'm looking at it on a sector to sector basis most of the time, and the S&P 500 for just about everything else. And so now we're breaking out to new highs. We're breaking out to new highs in semiconductors as well. It is a very hated trade, like from day one when I started talking about this trade, it was the thing that got a lot of people heated. And once again, I don't really, understand that's the thing. I don't look at the underlying inside of these stocks. I don't understand. And I also, it's not that I don't understand, it's that it's not pertinent to my system. So my system is set up to look at relative strength, to look at these sectors on a sector-wide basis. I'm not going to change my style because someone says, hey, semiconductors look like crap. I don't know, that doesn't tell me anything because I'm not getting paid whether they look like shit or not. I'm getting paid from them going up or down. Like if they go up and I'm long, they're making money. I don't know what exactly is the underlying or that move. And I don't know what the market looks to in the future. And I just know that me back testing things, this is what works for me best. And as long as I can back test things and come up with a strategy, I can continue to put on good trades time after time. And that's all I can do. I'm going to be wrong a lot. I'll be right sometimes. I'll have my stop losses in and we'll call it a day. But this has been a good, also semiconductors kind of tell us when the S&P 500 is going to get dragged higher. And it's still saying, risk on at the moment, market moving to the upside. So we'll see. The Dow, however, is starting to, break out of that range. So that's also something to pay attention to. And next up is breadth. So looking at the NYSE line on the bottom part of the chart, stocks above the 50-day high. That's finally gotten to a positive range. And same with stocks over the 200-day moving average. That's finally in a positive range. And so looking at both of these in a positive range, and I'd like to see the NYSE line start to get up and over this as well. But this rally looks a lot healthier lately. Also, when we see breadth move like this, something to keep paying attention to is we're at a point where I would assume we'd see a pullback soon. The VIX is very low. all these things. So I would be ready for some form of a pullback coming in stocks pretty soon. Going into commodities, this is cotton. Cotton in a the tightest range I've ever seen a commodity. That's a weekly chart, and that has been holding into a very tight range for all of 2023. It's a great thing to pay attention to. I'd be ready if that breaks out to the upside or the downside to follow it. I'm still leaning to the upside, but I'm just going to be patient and wait for it to confirm. And if it doesn't and it goes the other way, that's a short. So just wait for it. Cotton, here's the COTs, and this is why I'm still thinking it's going to the long side. We have commercial buying getting net long. When it gets net long in cotton, most of the time this leads to rallies. Look here, that was a bottom. Right here, that was another bottom. Here, bottom. Once again, bottom. So it's a good time to possibly look to getting long cotton, but waiting for price to confirm. Lumber also is something for me that I'm really thinking is going to be a new buy opportunity. When open interest gets this low and people are just like, fuck this product, I don't want to be in it anymore. I don't care about it at all. That's a time when you go, okay, well, people are going to start buying this thing. Everybody finally hates it. It's finally on the list of, fuck this product, fuck lumber. We're done with this. So I think that this is a lot of buying here. There's a ton of commercial buying here. And so if we're seeing a ton of commercial buying, seeing open interest draw down, to new lows, basically, I'd be interested in seeing lumber move higher. Once again, waiting for buy signals in that. Corn, take buy signals. We're here. It's also the same thing. Commercials are net long. Get ready to take buy signals in corn. Soybean oil, same thing. Take buy signals. Same thing. Commercials are net long. And we're seeing that in the commodity space across the board. And an extreme one is wheat. Wheat is extreme here. Commercials are extremely long. They're buying like crazy. That puts in a bottom in that market. So we'll see where that ends up. But I definitely would pay some attention to wheat at the moment and be ready to get long. And once again, here's another chart of wheat. It's ready to buy. That's a possible trend reversal. So just keep watching wheat, all the open interest or volume flowing into it. Sugar here. Sugar is just kind of was stuck in a range for a long time, started to move higher, hasn't really looked back. Once again, nothing to do, stay long. Now here's corn against cattle, and this is an interesting correlation if you've never heard it before. Corn has broken down like crazy, and this being feed to animals and cattle specifically. Most of the time when cattle prices are moving up, corn prices are moving down, and vice versa. I can see the jaws closing here now that corn's starting to look like it's ready for buy signals, and it's ready for something to get long, us to get long it. Basically looking at cattle here, same thing. Cattle's moved all the way up here. Cattle could possibly be a little bit too expensive, so we could see some mean reversion in both these products soon. I'm not getting short cattle, at the moment, still continuing to stay long, but I'd be interested if the trend did change and I'd start taking short signals in cattle and long signals in corn. Here's cocoa. Cocoa's finally been in a trend. It's so funny. This has been so much chop for so long. This is finally a new trend in cocoa, so we'll see where that ends up. But, once again, it's another one to just stay long. Here's gold. Gold has this throw under right here that we talked about a long time ago. It made a buy signal, continued higher and higher. To me, it's still in an uptrend. I'm still interested in being long, but this area here there's going to be a ton of resistance here. It's going to be very tough to get over it. So the good trade would be to wait till it gets over this, unless you're a very long-term trader like I am, but if you are waiting for a trade in it, wait till it breaks to the upside. Don't buy it here. We got long it, on this reversal signal here. So just continue to wait, be patient, and it'll come. Equities here. Large cap growth is the only thing that is outperforming the S&P 500. I found that kind of interesting because I'm not sure if I've seen that, and if it's been like in a half a year so far. So in the first half of the year, the S&P 500 is the only one continuing to stay strong. So, or sorry, the S&P 500 and large cap growth are very strong right now. So I'd continue to look in those sectors, both of those actually. The S&P 100, the growth sector, continue to stay along those factors at the moment. Sector wise, we're seeing year to date. Sorry, this is cut off, but this is the year to date. And looking at the year to date, we're seeing technology has been very strong. Communications, second strong, the number two here. And then consumer discretionary just after that. Everything else isn't really keeping up. And that's because technology, all these sectors are technology based. Technology has been the leader here. So, continue to be long tech, continue to move up stops, continue to be ready to, stay long this and also risk manage this properly because you want to keep your profits as well. So you got to move up stops or you do not keep your profits. Factors, sectors, same thing, semiconductors, the leader, tech, only thing that's up there with it is home construction. So home construction is also another sector to be long of, looks great as well. That's the home builders. Junk bonds here. Junk bonds look great. Junk bonds have been holding. They're not moving as strong as the S&P 500, but they are making higher lows. They're consolidating or possibly getting to the point where it's going to break out of this range that it's kind of been in. So I'd look for it to continue to move up. It's always a good thing to pay attention to just because if this is a good one that gives hints to what's going on in the broad market. When this starts to break down or make lower highs, the market usually follows and vice versa. And ending on emerging markets with the dollar. And like I said earlier, the dollar has been one that really dictates where emerging markets are going to go. And so if we're seeing emerging markets, if we're seeing the dollar start to break down, we think emerging markets will probably follow. Obviously, the pattern looks very similar, making, bottoming as the dollar topped, topping as the dollar bottomed. These are very correlated very heavily. So I'd be looking at this sector, being interested in getting long it. And, this could be a good new move to diversify your portfolio a bit. All right, everyone. I hope everyone had a good day, good week, good month of trading. I will be putting together more of a professional letter at some point. I'm actually working with another company to do so. That'll come up very soon. So I will let you guys know what's going on with that. And I hope you guys have a great rest of your week and enjoy the holiday.